this is really the only chart that matters from an investor's point of view, I would say. If you're a trader, that's your thing. I'm not a trader, I'm an investor. So this is more appropriate for my time horizon. And post-halving, we've always seen prices much, much higher, which again goes in combination with the macro that I've shown you, the liquidity framework, both on a secular point of view and a more tactical point of view. It's exactly the same thing with Bitcoin's reaching new all-time highs, post to 75% drawdown, higher 100% of the time. And it's also very easy to get caught up in crypto narratives, given that almost everyone has a view today. And that's a complicated place to be in, especially if prices are going down, right? It's very easy to get scared. So what I found extremely helpful, over my investing journey is all when in doubt to zoom out, right? And so these are the previous Bitcoin cycles versus the current cycle. And what you can see is that the big picture remains that we're still fairly early in a cycle from historical context versus both in respect to both time and performance, except for the Bitcoin Genesis cycle. So that was the 2011 cycle. But as you know, the market structure back then was, mostly speculative and looks completely different than today. So it's not really comparable. And when we look at the cycles that look most similar today, the 2015 to 2018 cycle maps very well. And so again, just illustrating how early we still think that we are. Now, does this need to play out perfectly? No, and I'm sure it doesn't, but contextually, it feels about right. And that's what's important here. I think, we could hit 20,000 on Ethereum this cycle and into the peak in 2025. Let's see, right? But what I also
not forecast so much as it's possible just based on repeats. Now, it may be different. Doesn't mean that. We're not saying Raoul and Julien banner headline, think ETH goes to 20,000. We're saying, listen, just understand how this could play out here.
Since the recent Bitcoin halving, we've observed Bitcoin and crypto prices remaining flat or trending downward, despite the 50% reduction in Bitcoin's supply. The anticipated massive parabolic surge did not materialize. However, according to Julien Bittle, head of macro research at Global Macro Investor, and Raoul Pal, founder of Real Vision, this is entirely expected. In their latest update to investors, they explain that Bitcoin, and consequently the broader crypto market, typically begins to climb significantly 3 months after a halving event, peaking within the next 10 to 12 months. In this video, Julien Bittle and Raoul Pal provide an updated analysis using charts and data to illustrate their view of the current crypto cycle. They discuss potential price targets, suggesting Bitcoin could reach $1 million by 2030 and Ethereum $20,000 by the end of 2025. However, they caution that these figures are guidelines, not guaranteed predictions. To watch the full 2-hour breakdown on the Everything Code, click the first link in the description and be sure to subscribe to Raoul's The Journeyman channel for more insightful content.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
And when we look at the cycles that look most similar today, the 2015 to 2018 cycle maps very well. And so again, just illustrating how early we still think that we are. Now, does this need to play out perfectly? No, and I'm sure it doesn't, but contextually, it feels about right, and that's what's important here. Additionally, we're just nowhere near a +3 standard deviation move in some of our sentiment metrics. So this is an aggregate of things like RSI, different oscillators, stochastics. And you can see that anytime if I aggregate, I started with like 12, I got it down to, I think 8 or so. That made sense. We're just not there yet. And that would, of course,
these are some of the things we use for the asset allocation framework for XPAM when we're looking at which types of hedge funds to allocate to, where they are on the risk cycle. There's a whole bunch of factors that we've built around the macro crypto thesis that we haven't got time to show today, but a lot of these all come together to allow us to try and allocate correctly according to the cycle within the framework of the fact that we're allocating to hedge funds, not to the market itself.
Yeah, right. And then if we just talk about, so again, if I just get back to this, if we cross 3 standard deviations, I'd be concerned. But if you look back to, let's say, 2016 cycle, we had a lot of these, 1.8 standard deviation moves, and it was choppy, but we were in the trend. So just don't get too lost in narratives around peak cycle. I really just don't think we're there yet. And then if we just skip to alt season for a second, and I've got 3 more charts, and then I'm going to leave you, love you and leave you. So this is altcoins. So at XPAM at GMI, we track 300 altcoins outside of, let's say, Ethereum, Solana, and of course, Bitcoin. So this is a percentage of assets outperforming, excluding stable coins, Bitcoin over a rolling 90-day period. And if we just look at this point, so we've talked about presidential election years. We've talked about Bitcoin halving years and the debt refi cycle years. It's all the same cycle. It's one big cycle. So in 2019, the percentage of assets outperforming Bitcoin over a rolling 90-day period, so the percentage of altcoins, was running at just 5%. Okay. Then by Feb of 2020, it went up to 67%. Then in March of 2020, it fell to 33%, and then skyrocketed higher over the next 6 months, reaching 83%. So 83% of altcoins were outperforming Bitcoin over a 90-day period. Now look at what's happened again in 2023. July of 2023, the year before the Bitcoin halving year, the presidential election year, the debt refi cycle year, so the everything code cycle year, we fell to 5%. Then in Feb of 2024, we skyrocketed to 65%, and we've since come down to 31%. Now, and again, if I just when I think about what I showed you as far as altcoins as a percentage of Bitcoin market cap versus the ISM, acting like like the Russell 2000, but not pricing any forward looking, it makes sense here now that we're entering the phase where altcoins should outperform Bitcoin. And if we look at the previous instance that this happened, right? So, and again, March of 2020, I didn't take, because at the time Bitcoin was at 4,900. This was the low of COVID. So it's not really fair. So what I did instead is I took the 8th of May level, which was 10,000. And then I basically projected out altcoins XE, because I think that's more fair when talking about altcoins, versus Bitcoin market cap into the peak of the cycle, which occurred in November of 2021. And altcoins went on to 20x from here. And Bitcoin went on to 7x. And again, 7x, it's nothing to turn your nose up. We're just at this cycle transition now where I think altcoins begin to gain market share versus Bitcoin. And this is another chart, a technical chart. We do a lot more technical analysis in Bloomberg, but sometimes we do them in DataStream. This is the tool that we're using here. You can see it was a huge wedge pattern. And we flagged this well before it broke out back at around 300 and, oh no, what was it? Yeah, it was 350 billion back in Q4 of last year. And we've since gone to around 800 billion. So this is the top 300 coins. And we think that we can get to 7 trillion or so.
And this was one of the things that gave us confidence in our Solana bet. We could see this breaking. Solana looked like it was the chart. We had a macro fundamental story. We had a technical story, and we had a Solana story. They all came together, and that gave us maximum conviction.
That's right. And that was a big trade at the time when we put it on. And again, the market cap has since doubled since we originally spoke about the banana zone. And so we think that this brings the entire space above 10 trillion this cycle. And the everything code, just to kind of wrap things up, is why you see charts like this. They don't need to play out perfectly, but prior cycles are repeats of current cycles just because of this debt maturity schedule and the rolling of the debt refi cycle. And so, I think, we could hit 20,000 on Ethereum this cycle and into the peak in 2025. Let's see, right? But what I also
not forecast so much as it's possible just based on repeats. Now, it may be different. Doesn't mean that. We're not saying Raoul and Julien banner headline, think ETH goes to 20,000. We're saying, listen, just understand how this could play out here.
Yeah, and I think that's an important point because I think most people are still scarred from the previous cycle. I mean, there's different probabilities of how this cycle plays out, and we'll figure it out by the time we get to fall. It could be a blow-off top cycle where things go a lot further than people expect. Don't forget, this is the first time we've ever had institutional buying. And there's also the probability that this could become a truncated cycle like we had the last cycle, although we tie a slightly lower probability to that. But nevertheless, this is a chart I wanted to show you. And then the last two charts on ETH, and then I'm wrapping up. I think I said that like 5 times now already, is that these 5 wave down cycles that we've seen, and I show it to you here on ETH just because I'm following up with the chart that I showed you previously. They're visible everywhere in crypto. So you get a huge pump higher, a sell-off, a wave 2 higher, a wave 3 lower, a wave 4 higher, and then a final dump lower into, full, let's say, capitulation. And then prices move higher again. And I see these time and time again. In fact, you can see it here over a different time horizon. And so I think that in our view, this was the pause, the halving, the correction that we've seen, the 20% drawdown in Bitcoin, more for altcoins. This was the pause that refreshes. The economy is still on track, right? Next up is rate cuts. The global rate cutting cycle is already happening, which is what I was going to show you now. And so this leads to an environment where we feel bullish out into mid 2025. So now I'm going to pass it back over to Raoul for the last section of this epic macro presentation, the supermassive black hole. Over to you, man.
Okay, I'm going to bring it all home now. You've heard me talk about the supermassive black hole, the crypto black hole. You've seen everything that we do to reach the kind of conclusions that we do. And now I'm going to come to the conclusion. The conclusion is straightforward. We're dealing with the technology adoption. It's the fastest pace of adoption of any technology that's investable. AI is not investable right now. And it's been growing at twice the speed of the internet. If we assume that it grows at the speed of the internet, which would be probably a false assumption, it should grow faster, for the rest of this year or so, we get to the end of 25 with 1.1 billion active wallets. Active wallets are not actual users because people have multiple wallets, much like people have multiple IP addresses, which is what this is showing too. We're comparing it to IP addresses. So we get to 1 billion wallets. That's a huge number. And that drives the adoption of the space based on Metcalfe's law and the valuation. Then if we extrapolate out into the future, I keep saying this space is going, this is the biggest macro opportunity we have ever been given. It's been the best macro performing asset of all time. It's the best risk adjusted reward of any asset in all history. It's an alien asset class. And that trend of $2.5 trillion today to 10 to 15 trillion this cycle to 100 trillion by about 2030, 2032 is driven by this adoption curve. That's when you get to 4 billion active wallets by the end of 2030. That's a mega trend. That's all you need to know. 2.5 trillion, 10 to 15 trillion, 100 trillion. You're trying to capture that. You're trying not to fuck this up because this is the gift you've all been given and everybody can put 10% of their wages in or whatever it may be because it's a democratized, fractionalized asset that's globally homogenous. Everybody in the world invests in the same product. Bitcoin is the same in Nigeria as it is in Brazil, as it is in the Cayman Islands. That is the gift to humanity. We get to invest in the infrastructure layer, the network layer of this incredible new technology. And on top, they'll build the applications layer, which will be the new Googles and Facebooks of this Web3 world.
Julien Bittle and Raoul Pal discussed the recent flat or downward trend in Bitcoin and crypto prices following the Bitcoin halving, noting that this is actually expected. According to their data, Bitcoin and the broader crypto market typically start to surge about 3 months after the halving, with the peak occurring within the next 10 months. Insights from the Everything Code suggest Bitcoin could reach $1 million by 2030 and Ethereum could hit $20,000 by the end of 2025. However, these figures are guidelines and not guaranteed outcomes. For an in-depth analysis, check out the full 2-hour breakdown on the Everything Code via the link in the description. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.